Beware the costs of financial middlemen. At least that's the latest word from the Bloomberg analytics team. Sheila Dharmarajan has been taking a look. The layers of people managing your money could be costing you up to 6%. Is that right, Sheila?
That's right, Deirdre. 6%. That's what you could be paying to have other people manage your money. So, for example, let's take a look at your average pension fund, right? You put money in your pension fund. Usually right off the bat, there's a fee for a pension fund consultant. Now, let's say that money in the pension fund is invested in a fund of funds. The fund of funds puts money in a hedge fund. And then finally, the hedge fund invested in an ETF. At the end of the day, 6% in fees is what you could end up paying. And Deirdre, it's not like all those fees actually translate into better returns. So CalPERS, for example, one of the biggest funds in the United States, 10-year annualized return of 3.25%, versus if you just stuck the money in cash, you would have gotten a yield of 3.33%, Deirdre.
So, Sheila, I mean, what's happening to the voice of the individual in all this?
Well, you know, the voice of the individual shareholder is absolutely weakening. So what you can see is that ownership dispersion, so that's how many people are actually owning the stocks, are on the rise. So fewer investors in those stakes means management doesn't have as much attention to those little shareholders. And this also comes at a time when CEO pay has skyrocketed. So the bottom line is CEOs are making a lot more dough with a lot less concentrated oversight. So the next time you think about stocking your money away in a mutual fund, which is a mainstay of personal portfolios, consider this. When you take a look at low-fee S&P 500 index funds, they've actually outperformed large-cap mutual funds over the last decade. And of course, for all the information on financial middlemen costs, check out Bloomberg.com for more details, Deirdre.
Sheila, thank you very much.